Hey guys, hope you're doing well out there. Time to take a look at Apple after they reported their Q1 2024 results. As we walk through today's results, basically see it was sort of a mixed quarter. There were bright spots over at Apple, namely their services business, but they are seeing some headwinds over in China and really the sales growth slowing down. We'll also take a look at some news as it pertains to Apple in terms of a new product launch, some maybe other mergers and acquisitions maybe Apple could get into. And then as always, we'll take a look at the statement of operations, one of the cleanest statement of operations and really income statements on the street, and we'll jump into that. We'll also take a look at it from a chart perspective. This one has been making a pretty steep rally over the past, we'll call it 6 months, and that is looking to now break down as Apple really sells off close to 3% in the after hours. We'll see where Apple is likely headed in the near future. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares in Apple, like we said, down nearly 3%. That was in the after hours, down closer to $180 a share, really giving up today's gains and then just a little bit more over the past 1 year. Still, this giant of a stock is up close to 28%. So keep that in mind. A little bit of a pullback is naturally expected with such a steep rally over the past 1 year. Now, revenues coming in at close to $120 billion, just shy of that at 119.6. Keep in mind, this was Apple's Q1, but the holiday period from a calendar perspective. So generally pretty strong over at Apple as those holiday sales do come through. And that was revenue growth of just 2.1% year over year. That did beat estimates on Wall Street by roughly $1.3 billion. The estimate, or the average estimate, was closer to 118.2, which is basically just 1% growth. So Apple coming in ahead of Wall Street estimates on that revenue side. On the EPS, GAAP EPS coming in at $2.18, also ahead of estimates by roughly 7 cents. And initially, I think on this print, the shares were higher, 1.4%, but as they guide in the conference call, which we'll get into in just a second, the guidance came in a bit disappointing. Now, in terms of net sales by category, the iPhone coming in at $69.7 billion. That was good for 6% growth year over year. Still pretty strong for a business this large and mature. Really, holiday sales for the iPhone coming in quite strong with 6% growth. The other categories, though, are struggling. Mac, you see revenues roughly flat on a year over year basis. iPad down substantially, down 25%. And then wearables, home accessories also down roughly 11%, again, on a year over year basis. So the iPhone revenue coming in strong, and then across the board, weak results from a sales perspective from Apple's. The other bright spot is really their services segment. This one continuing to chug along, continuing to grow at that double-digit clip of just north of 10%, roughly at 11% at $23.12 billion. Keep in mind, services, extremely high margin business, and we'll see in their income statement, Apple able to expand those margins likely as a result of that services business. Now, in terms of guidance, Apple did say they expect both the iPhone revenue and total company revenue for the March quarter, which is the one we're currently in, that is Q2 over at Apple. Those revenues are expected to be roughly similar to a year ago, so essentially flat on a year over year basis. So we take a look at estimates for Q2 on Wall Street coming in $96.19 billion. That would be growth of roughly 1.4%. Again, keep in mind, this is the midpoint. Apple is guiding for roughly flat year over year growth. So coming in just shy of Wall Street estimates, I think this is likely what sent shares down just a little bit in the after hours, coming in a bit shy of the average Wall Street estimates. Now, they do expect services business to continue to grow at a similar double-digit clip that they just saw, so right around 11%. And then they also do expect gross margins to come in between 46 and 47%. So that's continuing strong gross margins over at Apple. Again, likely held up by those service revenues. Now, in this most recent quarter, China worries did overshadow sales growth. So although Apple did post a pretty strong services revenue, that was their all-time high in terms of a services top-line number. The greater China sales came in at just $20.8 billion. The street was expecting $23.5 billion. So that is a pretty substantial miss for Apple over in China. That is their third largest market behind North America and then Europe. So a pretty big miss in China, certainly a bit of a concern over at Apple. That economy is slowing down, and that's absolutely affecting a name like Apple, also affecting other companies that are doing substantial business over in China. You take a look at a Nike or a Starbucks. Yeah, they're also affected by the slowdown in China, and certainly Apple is no different. Now, maybe the next leg of growth comes from the Apple Vision Pro. That product is finally here. So there's a few videos on YouTube kind of breaking down this product, certainly from a tech perspective. it is really cool. If you take a look at a breakdown of the Vision Pro, just what it can do, certainly extremely cool technology that Apple has put together. It also looks fairly sleek. I like the aluminum built. The only question surrounding this is that will there be a widespread consumer adoption of this headset? Certainly at $3,500, it's difficult to see this thing being a widespread product. I think only 15% of respondents to a January 2024 survey said they were extremely likely to consider buying the Vision Pro. Certainly you have a certain subsect of the audience that is looking to really get into the latest and greatest tech, and those I think are your early adopters of this. But in terms of mass adoption, I don't think that is coming for the Vision Pro, at least at a $3,500 price tag. Maybe in subsequent models, if Apple is able to reduce the price, maybe just make a cheaper version, kind of like how they have their iPhone good, better, and best models. Yeah, maybe they introduce other variations of this headset. Maybe that can take it to mass adoption. I think there's still a long ways to go, but I do like this move that Apple is doing, kind of getting into the VR, AR space. I know they call it spatial computing, and so not really a VR headset from the perspective of Apple, but essentially does the same thing, is a competitor to Meta's Quest, which is essentially a fraction of the price. So certainly it'd be interesting to see how the Vision Pro holds up. We'll have to just wait and see the results on that over the next few quarters. Now, Apple buying Peloton, someone thinks it's a fine idea, and that someone is Gene Munster, managing partner at Deepwater Asset Management. So he posted on the social media platform X that Peloton's not as broke as its $1.5 billion market cap suggests, and that maybe Apple should be in the market to pick up Peloton in terms of integrating it with Apple Fitness. Certainly Peloton has 3 million connected subscribers, and then Apple Fitness right now lacks the benefit of hardware integration, and Peloton's brand would certainly make that more appealing for Apple's customers. He did also then go on to say that the biggest reason why Apple would likely pass on this is because they don't buy broken companies, and I think that is the key reason. That's the reason where I would put my money on. Certainly when you take a look at Peloton, whose stock was actually down nearly 25% just today on the heels of their earnings. Yeah, I don't think Apple is looking to pick up broken companies like a Peloton. Certainly, even at $1.5 billion, that is just pocket change for Apple. Even if they were to pay a 100% premium for Peloton at $3 billion, that is a very small acquisition. Certainly you have the FTC, and from a regulatory perspective, that might not be allowed to go through. But even if it was allowed to go through at $3 billion, not a big acquisition for Apple, but I think they'll still rather look to pass on it just because Peloton, like Gene Munster said, is a pretty broken company. And I think a 25% decline in your share price just in one day kind of reflects that. Now, moving on to the financial statements, like we said, one of the cleanest on Wall Street. This company really doesn't sugarcoat anything, keeps it simple with just a 3-page financial statement, one of the easiest to follow. And so we have $96.5 billion worth of product sales, and then services coming in at $23 billion. Again, year over year, that was good for 11% growth, bringing our net sales up to $119.5 billion. Now, Apple still, even with the sales slowdown, executing their company to a perfect T. You see product costs actually going down from 60.7 down to $58.4 billion. So even though their product sales didn't really budge, they were able to reduce the cost of those sales roughly by $2 million, and then the cost of those services not really ticking up all too much. And so their gross margins were able to jump roughly $4 billion, even though their top line sales only jumped right around $2 billion. So Apple, although not experiencing massive top line sales growth, executing very well, really showing you why they are the top of the top when it comes to execution. And then from an operating perspective, again, you see R&D actually ticking down. That's likely in a period where Apple is spending a significant amount of R&D on a new product. It's certainly not easy launching a new product. And even despite that, Apple able to tick down their R&D year over year is certainly impressive. And then the SG&A not really ticking up all too much. And so your operating expenses staying flat, that essentially allowed the entire benefit of gross margins, the additional $4 billion, to flow right down to their net income, also increasing by right around $4 billion, now coming up to $33.9 billion. So again, Apple really executing on their business model and controlling cost, which is allowing their bottom line to increase faster than their top line. Now, in terms of cash flows, we pull down that $33.9 billion worth of net income in the most recent quarter. We get to add back a few line items, not a whole lot of depreciation and share-based compensation. And so we get $39.8 billion worth of operating cash flows. And then in terms of investing activities, not really a whole lot that Apple invests in. As you see, they just spent $2.3 billion in the property, plant, and equipment, that actually ticking down by roughly $1.5 billion year over year. The majority of their operating cash flows, this $40 billion figure, roughly half of that is used up in the repurchase of common stock. This company is known to do massive buybacks. That's how they return a majority of their cash to shareholders. And then the rest is they pay off some dividends. And then the remainder they get to add on to their cash pile. Roughly $11.2 billion is what they added onto their cash and cash equivalents. So Apple, again, buying back a ton of common stock, nothing really out of the ordinary for Apple, and then increasing that dividend payout just a little bit year over year. All things considered, cash flow is looking fairly healthy, balance sheet looking great. And then from an income statement perspective, really, it's just the slowdown in sales in China that's causing a point of concern for this stock. But as long as you have services revenue holding it up, yeah, this one can continue to kind of put aside those China concerns. Now, moving on to the technicals for Apple, this one has been making a pretty steady and predictable uptrend really since January of last year, is looking to break through that. In the after hours, this one is down close to 3%, now down to $180 per share. So certainly I think if Apple does see a pullback, wouldn't be overly concerned, has been making a pretty steep rally. And so a pullback certainly should be expected in shares of Apple. I think your first level of support is down here, actually closer to $170 a share. Not really too far off from where the stock is in the after hours at $180. I think certainly you don't want Apple to break underneath the previous set of lows. Again, closer to $170 a share. If it does that, likely heading lower, closer somewhere in the 150s. But I think this could be your first level to step in and pick up shares of Apple. Certainly, I think nothing to be overly concerned about. They are experiencing the slowdown in China, but as you see, service revenue is continuing to grow at a pretty good clip. And then that's what they're guiding on their upcoming quarter. And so I think Apple just really executing pretty good, even in a difficult macro environment, especially when it comes to China. Really, I think it would come down to the next leg of growth for Apple, whether that's their new Vision Pro product, or maybe it's a better upgrade on the new iPhone that's going to come out. Maybe just upgrading the camera and screen quality won't cut it anymore over at Apple. That was my take on Apple Incorporated. Not the best quarter, but certainly I think Apple is doing a pretty good job, at least cutting costs where they can and really executing still quite well. They're also doing that buyback, and you do get a slight dividend on this one. So one I think you can pick up on any major dips and then continue to hold. That was my take on Apple. Let me know your thoughts on this one in the comments section below. As always, thanks so much for listening, and I'll see you guys in the next video.